Welcome to This Explainer. I'm absolutely thrilled you're tuning in today because we're looking at a truly fascinating paradigm shift in financial infrastructure. Look, we live in an era of hyper-connected liquidity, right? Capital moves across borders at literally the speed of light. But here's the catch. For millions of consumers and businesses, there's this massive, invisible, high-friction wall standing directly between their physical cash and the digital economy. So today, we're going to break that wall down. We're going to explore exactly how connecting physical currency to digital utility is unlocking a massive commercial opportunity.
Okay, let's dive into this by looking at two very different realities happening at the exact same time. On one side, you've got the hyper-connected digital payment world. Think of, a sleek, neo-minimalist coffee shop in a major tech hub where a customer just taps their smartphone to pay. It's completely frictionless. But then, on the other side, just a few miles away at a family-run convenience store, you have a gig economy courier counting paper bills from a tip envelope, staring anxiously at a low balance alert on their digital banking app. That physical cash, it's stranded. It is high friction, it's disconnected, and as we'll see, it represents a massive gap in the market. So here's our roadmap for today's explainer. We'll start with the banking desert crisis, move on to the local teller window, unpack the commercial upside, dive into the API architecture, and finally review execution and governance.
Section 1. The Banking Desert Crisis. A Structural Disconnect.
To really grasp the scale of this opportunity, we have to look at the structural disconnect happening right under our noses. Branch closures are accelerating globally, mostly due to massive real estate overhead and shifting corporate priorities. But here's the absolute critical takeaway. Physical cash hasn't vanished. Nope, it's simply been displaced from bank vaults to retail tills. And because of this, consumers are left facing incredibly long commutes or even predatory fee structures just to deposit paper fiat into their neobanks or digital wallets. And on the flip side, merchants are left holding the bag, literally. They bear heavy operational risks, high insurance costs, and they have to wait days for armored cars to clear their liquidity. So physical cash is just stranded at the edge, actively starving our digital ecosystems of physical on-ramps.
Section 2. The Local Teller Window. Building a Branch-Lite ecosystem. Now let's move to and see how this builds into an incredibly elegant user experience. We call this the Cashier-Assisted Token Model. Honestly, it takes complex cryptography and makes it as simple as buying a pack of gum. Here's how it works. Step 1. The consumer opens their native banking app, types in the amount they want to deposit, and generates a secure, dynamic QR token. Step 2. The retail cashier simply scans that token at their standard point-of-sale register, takes the physical bills, and verifies the count. Step 3. The POS system routes that authorization token, triggering an immediate ledger settlement that credits the consumer's account in real time. It literally takes seconds, effectively turning that convenience store on the corner into a ubiquitous local teller window.
Section 3. The Commercial Upside. Exploring the triple win.
And this brilliantly illustrates a truly symbiotic relationship, a triple win triad. For consumers, the huge benefit is ubiquitous, low-cost cash on-ramps straight into traditional or digital assets. For merchants, well, their retail till transforms into a micro-treasury. By accepting consumer deposits, they systematically offset their physical cash on hand. That drastically lowers armored car transport fees, mitigates their risk, and frankly, brings guaranteed foot traffic right into the store. Finally, for the sponsoring institutions, whether we're talking traditional finance or DeFi, they get zero CapEx customer acquisition. They secure highly sticky, low-cost deposit pools and high-velocity transactional volume. Capital flows fluidly between all three apexes. It's a real game changer.
I want you to really absorb the reality of this model. Exponential customer acquisition without capital expenditure, without laying a single brick or pouring a drop of concrete. Think about that. For prospective partners and investors, this is the ultimate competitive advantage. You're scaling a massive banking network on top of infrastructure that already exists. You are entirely bypassing the exorbitant overhead of physical real estate and staffing that usually throttles financial expansion.
Section 4. API Architecture. Reviewing enterprise-grade tech.
Okay, let's get into the tech. At the core of this architecture is ISO 20022. Think of this as the universal translator between the retail edge point of sale and the global financial rails. The transaction orchestration engine takes the incoming POS requests and translates them into these standardized messaging packets. This guarantees universal interoperability, so it ensures that no matter what banking platform the consumer uses, the data speaks the exact same language.
So the crucial point here is how this technical mode actually operates in practice. At the perimeter, our edge infrastructure utilizes an API gateway fiercely protected by TLS 1.3 and OAuth 2.0 security frameworks. When physical cash is handing over, the ledger routing is entirely dynamic. It triggers parallel instructions that can instantly settle via traditional real-time rails like FedNow, or seamlessly switch to mint equivalent value on programmable DeFi or stablecoin ledgers. And most importantly, compliance is absolutely non-negotiable. We're talking integrated anti-money laundering and know-your-customer risk engines that evaluate token generation in real time. This stops structuring and illicit fund velocity dead in its tracks before it ever even touches the ledger.
Section 5. Execution and Governance. The Phase 1 Pilot Project.
Now, what's really interesting about this slide is how we actually execute. We use a highly precise RACI matrix to govern the pilot. Accountability is explicitly mapped out, so there's zero ambiguity. The product tech lead completely owns the API integrations and edge terminal logic. Compliance and risk, they hold absolute accountability for regulatory clearance and automated fraud matrices. Meanwhile, merchant operations commands the front line. They make sure that store cashiers receive the exact training necessary so there's zero transactional friction during the actual checkout loop. To scale operational velocity without losing control, the governance cadence is highly transparent and honestly extremely rigorous. We're talking daily stand-ups to maintain a micro-focus on tech integration and immediately resolving blockers. Weekly core working group reviews dissect system telemetry, tracking everything from token generation success rates to merchant float balances. And biweekly steering committee syncs ensure that executive sponsors and partner bank leadership remain in tight strategic alignment. It is an iterative feedback loop designed to isolate anomalies and scale incredibly fast. To bring this all together, the core philosophy is summarized perfectly right here. Branch-Lite retail cash-in is about minimizing the footprint of traditional commercial banking while maximizing the access to global capital. We are essentially transforming the everyday retail counter into a digital clearinghouse. We aren't rewriting history here, we are simply re-architecting the infrastructure to finally bridge the last miles between physical currency and digital utility.
Which leaves us with this final, provocative thought. The physical network, it's already built. The retail convenience stores and local points of contact, they're already open and operating. The technology to orchestrate the trust layer is fully developed. The only question remaining for prospective partners and investors looking at this massive edge of liquidity is, are you ready to turn on the switch? Thank you so much for joining me for this explainer. I really hope this completely changed how you view the intersection of physical cash and digital finance.